to thank you all for coming. As the world's leading provider of service to virtual offices, we were always getting requests from our clients to put together a networking event where they can meet other like-minded business professionals, and as a result, Business Shorts was born. We added to that the opportunity to not only meet your fellow business people, but to actually get some guest speakers in to talk about relevant business topics and trends so that we can keep on top of things. And this evening we have Matthew Lobner, the CEO for HSBC Thailand. So just a little bit of information about Matthew. Prior to relocating to Thailand, Matthew was the global head of corporate international business for HSBC in Hong Kong. He worked with HSBC in Europe and the Middle East. Prior to that, he was with McKinsey and Company in Chicago. And before joining the private sector, he served as an officer in the United States Navy. I think his office might be a little bit scary, yes sir, perhaps. So I think I can safely say he knows a fair bit about business and is pretty international. So without further ado, I would like to hand over to Matthew this evening to talk on prospects for the banking industry. All yours.
Thank you so much for the warm introduction. So I'll just spend a few minutes on the topic that was asked, and please open for questions. I'm happy to, whether it be on the European situation or what's going on in Thailand. With that, came to McKinsey and have been with the bank, and they keep calling with interesting options. So certainly something to keep the interest level high. So just talking about the banking industry, if you go to the first slide. Next. Just a bit of a plug for the group. I know many of you are aware of the group, but certainly I think one of the most stable banks that's come through the crisis, and one of the few banks that really didn't need any support. And we continue to operate in over 80 countries, 300,000 employees, and I think in a very difficult environment. We'll talk a little bit about that. I think every day the paper is what's going on in Europe, what's going on in the US, how is China, and how are all these things related. And I think one of the real challenges right now is how that's impacting the banking environment. And from a business perspective, I think one of the most important things is just looking at the size of some of these economies. And I'll get to Greece in a second, which is I think a very pertinent topic, and talk a little bit about how that's affecting even Thailand today. Greece really doesn't matter too much to us, but actually it's having some big impact. If you think about the size of some of these economies, the US and the EU still are the largest GDP. They may not be growing as fast as China, which we read quite a bit about. But in terms of overall size, this is why the ECB and the Fed continue to be drivers in terms of monetary policy. And the markets guys typically are very attuned to what interest rates are doing, what data points are coming out of these markets. China is still growing very rapidly, and I think GDP is going to start to cool off. They've got some issues in terms of, I think they've had quite a few infrastructure projects that are going to be challenged over the next few years. But you can see that they're still significantly smaller than either the US or the EU in total. I want to talk a little bit about the challenge of this debt problem and what all of the actions that are happening now and how that's impacting the banking industry and sovereigns. If you look, the big topic has been Greece, and two issues. And this graph kind of shows overall GDP as a percentage, or debt as a percentage of GDP versus the budget deficit. And so top right is generally bad. So Greece is running 160% debt versus GDP and a deficit of 8%. And you look at some of these other countries, whether it's the pigs, the Portugal, Ireland, Greece, or Spain, or even Italy, where significantly above kind of 100% for some of these countries, and still running a deficit. And if you think about how much of the tax revenue that's being generated by the interest that they have to pay on their sovereign debt, it starts to drown you. I think one of the challenges is, and if you go to the next slide for me, that we've been really focusing in the paper about these countries. Greece, what's the problem in Portugal, what's the problem in Ireland? Actually, it's not the issue. The issue is really these countries, which is Italy and Spain. And about a month ago, Italy's cost of debt had approached 7%, which is generally the threshold at which countries have a real problem carrying the interest burden. And I don't have a slide on this, but as you think about how this affects the banking industry, most banks are required to hold capital for what they lend. So when we lend to a corporate, when we lend to a commercial customer, even when we lend to a retail customer, we have to hold capital against that. And typically, regulators require you to put that into sovereign debt. So as the safest place that you register your capital. And so if you think about the French banks or the German banks having huge exposure to other Eurozone countries. And so if you think about Italy and Spain and Greece, French banks, German banks, and to a certain degree, UK banks, and even some US banks, typically will have sovereign debt exposed to these. And so when Greece says, hey, wait a minute, we're not going to be able to potentially meet our debt payments, what that means is banks need to go find new capital. And so this is the concern in all of the discussions that are happening in Greece, which is actually the smaller debt of these. And just a point on this is that Italy's debt is larger than the combination of Spain, Portugal, Ireland, and Greece. So you're talking, trillions of, over $1.5 trillion, I think, versus Greece at something in the 300 billion range. And so the impact is that banks all of a sudden are having to say, you know what was once safe in terms of our capital that we're registering, we have to think about. Regulators are saying, well, you're going to need to recapitalize. And therefore, there's a big squeeze in terms of how you can adequately provide lending and meet the regulator demands. And so that's the challenge that central banks and banks are facing right now. And if you think about the market here in Thailand, there is a French bank that's actually pulling out entirely. Callion is going through this process right now, and they're doing this in a number of countries. And one of the issues is that actually in their capital base, they need to ensure that they're focusing their attention in the right place. And so I think you're seeing a lot of banks go through this process. So if you think about the topic of prospects for the banking industry, this is a real challenge that banks are facing right now. Go to the next slide for me. Let's talk about Asia, because I think that's been the driver of growth. I think you're seeing a number of shifts around why companies, banks are really focusing their attention here. There's certainly the share of GDP, and many banks have done research, we're just one of them. But I think you're seeing a big shift in terms of GDP concentration shifting, not just to China and India, but the Indonesias, the Malaysias, and Thailand. Thailand's actually predicted right now is the 27th largest economy. It's projected to come up 5 points in the next, whatever it is, 15 years or so. So I think a lot of growth in terms of share of market. They're growing quickly and they're going to gain a share. You can go to the next slide. What you also see is a lot of the countries are really focusing on developing their own consumption. And so if you think about China right now as an exporting nation, that's actually shifting to say, hey, can we drive so that we capitalize on this middle class income growth, that we actually have a consumptive economy. And you can see this across, whether it's the ASEAN markets or China or India, that the growth in middle class or consumptive market is growing at a 12% annual rate. And this is what governments are really trying to capitalize on, to shift the economy from an export-led to a more balanced economy. Go to the next slide. Spending just a minute on Thailand, I think it's quite interesting just looking at, and this is from last year, first 9 months, how this plays out in terms of imports and exports and which countries they're trading with. I think what you're seeing, and this is driving a bit of the AEC phenomenon, is largest trade partner is ASEAN as a market. It's still, if you broke up the countries, they'd be smaller than Japan, China, etc. But largest amount of trade is that bloc. But what you also see is that right now there is if you added up all the blue versus the red, in many countries it is still an export market. And so this is continuing to drive this phenomenon that let's build the consumptive market locally so that it's not strictly limited to export demand and being a provider, whether it be high value in the supply chain or lower in the supply chain. Japan still remains, as a country, the largest trade partner with Thailand. And that's why, if you think back to the flooding crisis, I think the Japanese were quite involved working with the Thai government in terms of the needs of whether it be auto manufacturers or electronic manufacturers, in terms of providing reassurances or a long-term plan to ensure that the investments that they're continuing to make will be safe as we go through different types of crises that may come this way. Go to the next slide. We at the bank look at a lot of different industries as we think about our clients span this, and it was quite interesting just to kind of take a look at it. For the different export sites, what is the mix? And you still see a large predominance on the electrical side of Thailand. Between whether it be electronic appliances or parts and circuits, so it might be Western Digital is providing hard drives. In fact, the site in the UDIA provides almost a quarter of the world's hard drives, which is why it was such a big issue that was flooded. But many of the suppliers that supply them are also here. And so that when you look at, a lot of times the concentration will be higher for those electronic parts because it might not just be going to a site here. And that was, if you think about the impact of the flood, one was the Thai companies that were impacted, or the multinationals, but as important was the supply chain that was impacted. So this is something that we look at in the various businesses that you're in, if you're in the export business, certainly something to understand, which is where are the products going that are going to the different sites that are out there. I think just wrapping up and looking at whether it be prospects for the banking industry or how business is changing. I think you're seeing more and more companies going abroad and building a network internationally. In my last role, I was looking at this globally for HSBC for middle market firms. This was maybe firms between 30 million and a couple of billion in turnover. And this bottom chart I think is quite interesting. Whether it's India, Mexico, UK, over 2/3 of firms are planning to expand into new markets. And if you look at Thailand, I think there's a large outbound flow right now, whether it be your PTTs and CPs, or moving down into the next tranche of Minor Group or Thai Union Frozen, who's now the world's largest tuna producer. Lots of liquidity is driving an outbound flow. And so I think from a bank's perspective, the prospect for banking industry is that we need to be able to support our clients as they go abroad in the business sense, because it is getting more complicated, whether it be how you deal with money laundering. So Thailand is just getting downgraded right now by the International Anti-Money Laundering Task Force from what was already a cautionary state to a red state. How do you handle that if you're coming here, or if you're going abroad when you know that your payment flows are going to have more scrutiny? How do you ensure that the plumbing is set up so that actually payment flow is quite easy? So I think from a banking perspective, banks need to be able to support that when as high as 95% of the companies are looking to go abroad. And I think if you look, even SMEs on the smaller side, almost half are looking to be abroad. And in Thailand, it's starting with, well, I'll go to Vietnam or I'll go to Myanmar. But quickly that will expand. And so, one from a company perspective, looking at how does that work, and second from expecting your bank to be able to provide that. So I think that was about it. I think the last slide I won't go through. I'll stop there. Just a quick overview and just running through kind of what's going on in the banking industry, why you're seeing a lot of this activity in terms of regulators and ECB influencing what banks are doing, and then a bit on the local side and how firms are going internationally and how the banking industry is having to change to ensure that they're supporting it. I'll stop there. I'm happy to answer any questions if you have any regarding kind of what I went through or other topics.
You didn't mention the bank industry at all, is it correct? Didn't tell us anything about the banking industry now. So what are the banking industry? What is the reaction of the banking industry? And I think this is a topic.
The banking industry reaction
Yes.
to the change.
Whatever.
So I think so if we look at the banking industry reaction, if you start with kind of the most drastic moves like a Callion, right? Banking industry number one is shifting. They're shifting their focus to say actually we need to prioritize which markets we're in. I think in terms of interaction with regulators, I think banks are working closely to understand how can we ensure that we are well capitalized and ensuring that we can continue to lend to whether it's corporates or SMEs. And you see this, the UK is a good market where actually banks are agreeing with the regulator and trying to set targets to do that. And as far as capitalization, and I did talk a little about this, is banks are starting to think about, as regulators are demanding different types of capital, banks are having to go find different sources to do that. So I think that's on the global sense. On the local sense, in terms of banking, I think banking is adjusting to ensuring that international offerings are available. If you look even at local banks, Bangkok Bank, Capricorn Bank, a lot of them are starting to open up branches or already have branches in foreign markets. I think we're well positioned in 80 markets from a corporate perspective. But I think that is a big change that you're seeing in the banking industry, that banks are responding to that. So I think kind of 2 points, and maybe I wasn't as clear to answer your question, but one, on the broader sense, recapitalization is causing a lot of actions. And on the local sense, if you think about what banks are doing, really trying to ensure that they can provide seamless service if you're going to Vietnam, or if you're going to Bangladesh, or if you're going to Dubai. So I hope that answers.
I think that the Thai banking market is a very restricted area. The foreign banks, international banks can just set up branches. They are not allowed to set up any corporation by themselves. So I would like to know, what are the reactions on the international developments?
So I'll talk a little bit about local talk, because we work closely with the Bank of Thailand here. The Bank of Thailand is going through a liberalization process right now. So up until 2 years ago, banks could have only one branch, unless you entered some sort of joint venture like ING has or GE. That changed actually last year, where you could open up to 3 branches. And that's moved this year that they're actually a plan to open, you can open up to 20 branches if you become a local subsidiary. I think that's going to continue to move more, because if you think about what banks need to do in order to lend to smaller institutions, actually need a bigger base. So does 20 branches get you that? Probably need more. But I think the Bank of Thailand continues to look out on this front. In terms of operations, I think actually the only restrictions right now are in terms of foreign banking actually applies to both local and foreign banks in terms of currency protection. Some of those things are being discussed right now in terms of how you hedge, what can you hedge. And I think this has been a result of what happened in 1997. I think it's, interestingly, has, coming through the crisis, Thailand actually came through quite well through 07, 08, 09. And I think now they're realizing as you move into the AEC 2015, that there actually has to be, more openness. So if you were to look at a Malaysia or a Singapore, there is more free access to banking, and I think they're moving in that direction. And hopefully the pace will continue to be, with Dr. Prasan, who's the governor, I think he's quite keen to ensure that happens. So, but I think in the past, you're right, there have been many restrictions in looking at that.
Very good.
What do you think about the future for the rating agencies that have performed so magnificently through the GFC?
It's a funny one. I was actually a McKinsey guy. They do these alumni events, and they had one of the Fed presidents come and speak. This was in London. And he said, coming through the subprime crisis, the biggest thing that he said he never would have expected was the performance of the rating agencies. And he said he put up a chart that kind of showed the downgrading of some of these CDOs. These are the collateralized debt obligations that were slicing these tranches and doing all this crazy stuff.
AAA rating.
Yeah, AAA rating and went to junk overnight. And it's a good question, and I think it's one that you kind of would like to have an independent source looking at debt ratings. And was it that they didn't understand? Was it that they didn't have the expertise, didn't ask the right questions? I mean, certainly in the subprime, lots of people got that wrong.
They got greedy.
Yeah, so there is an element in terms of the financials. Should it be a regulator function? I think these are all excellent questions. I don't think that the answers of those are easy ones. But I think it's an excellent question, and I think a lot of people are asking the same thing, to say, hey, how do you get that independent rating on debt? Because it's not just good for, it's good for the bank as well, because if you think about when we're issuing bonds, we would like to make sure that the right ratings are applied, and when we're distributing, whether it be an institutional investor or through a retail channel, that it is the proper rating.
Can I maybe shed a bit of light on it? The ratings that the ratings agencies come out with are like all valuations of all assets. They are only an answer to a question. If you change the question, you will get a different answer. The questions were rigged so that the ratings agencies always said AAA or AA or A+. I sat with the then European CEO of S&P ratings agency back in 2004, and I said, this is all going to land up on your desk. You cannot keep rating this stuff AAA because they're all going to blame you. I know it's not your fault. You're only getting asked to answer a question and you're answering it, but they are all going to blame you. And he said, oh no, they can't do that. Well, they have.
Yeah, now it's happening in the sovereign debt ratings.
Yes.
It went from what I think was in theory supposed to be an isolated event to now saying, well, actually, sovereign ratings, and so it's playing out.
But they only ask a question, and it's based on the assumptions that the person asking the question gives them. They say, value this office building, assuming it's 100% full and that the rents go up 10% per year. That's basically the sort of question they ask. So of course you get a rigged answer.
Yeah, difficult.
Would you like to comment on the regulation and between corporate, retail, investment banking, and what's going on in the regulatory area, and the fact that HSBC has just got out of retail in Thailand?
In Thailand, okay, yeah. I'm a customer as well, so for those who are customers, I'm going through the same process as well. I think a couple points.
Specifically, like the UK is talking about splitting it all up as well.
Yeah, I think the ring fencing, I think so just for edification, I think what's happening in the UK is kind of taking retail banking and separating that from investment banking. And having not operating in the UK certainly for the last 3 or 4 years, I'm not as close to the regulation. I think the theory of the case is that the investment banking is risking deposits that sit in the retail bank on bets that aren't based on solid lending. I think what I comment on is I think that from a corporate perspective, I think having a good deposit base and using retail deposits to fund SMEs, middle market, or all the way up to the Tesco's, here the Home Pros, that actually makes a lot of sense. And I think you want to be able to have the liquidity to do that, to enable your corporates to grow. And I think when it gets into the proprietary trading side, I think a lot of countries are going through this, whether it's the Volcker rule, ring fencing, and I think they're working through how can we ensure that we are protecting depositors, that it's not necessarily a government insurance policy, and that the trading side of banks is isolated from, or at least in some way isolated. One thing they're doing is raising capital levels, so there's a new Basel implementation that's actually raising capital levels, and it's actually going to be higher for the largest banks. And the question becomes, does the ring fencing add to that? Is it needed? Because you don't want, I think one of the challenges is you do want to make deposits, the liquidity available, so that SMEs and middle market companies can have that to borrow and drive growth. So it's kind of finding the right balance, and I think a lot of countries are going through this right now. It'll be interesting to see where they end up, because I think a lot of these things are, they are working closely together. Regulators, government, and banks trying to figure out.
I'm just wondering what went wrong, because it used to work.
Yeah. Yeah, I think, yeah, it's a good question. I think, and then there's probably not an easy fix. So I think there's probably a combination of efforts that in terms of investment banking. And I think there's a lot of confusion between what investment banking in terms of the trading side versus supporting Tesco who wants to go build 500 shops in Thailand. Very different than what an investment bank might do. But I think a good question that is playing out as we speak in the theater near you. So.
Can I jump in at this point and say I may actually rescue Matthew before we ask him for the meaning of life this evening, and could he please get that over within 5 minutes, and say thank you very much for your help this evening. I think that was a lot of questions, so a round of applause for that. And I'm sure if I reopen the bar and you've got a beer in hand, I'm more than happy to take some one-on-ones from you.
Absolutely.
But I think maybe bottom line, wrap up, this is the place to be for all of us. Would that be something we
Asia.
could perhaps agree on, that we're in the right place at the right time? And on that note, I would like to actually ask Matthew to help us out this evening and draw a lucky winner to set up a virtual office either here or internationally. That was in the presentation, thank you very much for that. To expand with Servcorp in the region, and we also have a night for two in Fraser Suite and lunch to get over the night before and all the work we've got to do with Crown Plaza. So who is the lucky winner?
Okay, we've got Thomas LaHood from Servcorp.
Thomas. Oh, you have to put the wine down. Congratulations. There you are. Thank you. And just a little thank you for Matthew. Oh no, Nikki beat me to it. Thank you very much. Thank you so much. Another round. I hope you can all come back to our upcoming events. I think I might invite Matthew back, because I think there was lots more questions there which I've had to stop just so I could force you to have a drink. I'm pretty tough. So please, the bar's open, enjoy yourself and have a lovely evening. Good night.
And we're just wondering whether HSBC are moving their offices in here.
Okay,